do a couple acquisitions. So maybe we'll follow up after the call and see if there's something we can do there. And to Michael's point, they have an interesting way of buying up the 8A companies that may allow them to kind of subcontract out some of that work, and we'll see if it goes. But Nelson Mullins is, I've been at this 30 years. Nelson Mullins is, I guess a little bit older than Focus Investment Banking, but we're about a 700 lawyer firm. Well, we do have an office in New York. Most of our offices are in the southeastern United States. And looking forward to the discussion and kind of throw it out there with a couple of topics that I want to talk about, and particularly given that the group's focus on transactions, will kind of stay a little bit more in the transactional space. But as we prepared for this panel and reached out to one of my GovCon regulatory partners about what he saw as the likely trends in spending and Biden administration focus policies and things like that. And he said, one, that we're seeing a tremendous amount, and this is true across both deals and regulatory, tremendous amount of activity in cyber, not so much in the deals, but as much as, although I think it will drive deal volume, and I'll let Manan and Jeff Jen talk to that, in terms of insisting on the companies being fully compliant on a cybersecurity basis with the various standards that the government's put out to DoD and Intel, and that we expect to see that kind of rolling through the civilian agencies, which will create both an opportunity and a cost, quite frankly, for government contractors, and we can focus perhaps on what that means for the smaller government contractors. The second big thing is everybody's expecting, obviously, a lot of spending in healthcare. He did not think there would be any particular slowdown, at least in the near term, in defense and intel spending. Maybe a shift in focus, but basically that would be there. And then we kind of talked, when Biden was last in Washington on business, the administration he worked for kind of focused on insourcing some of the government contracting work. He did not think that would be a big issue. It was largely unsuccessful under the Obama administration, not really pursued under Trump, and easily thwarted because the government actually really isn't capable, he felt, of actually re-insourcing some of the work. But he thought the next big piece would be unionization, that there would be a push on making unionization available to the government contractors and the workers, and that the administration would look to that. And I guess last, there's obviously been a push to small minority-owned businesses and a focus on that, and perhaps kind of a renewed focus on that. And we can kind of, talk to what that means and where it goes. I mean, to Rob's point about, foreign investment, we can circle back to that, but that's going to be an interesting one. I think nobody really knows. Clearly, I think Trump left Biden in a tough position on loosening some of the restrictions. And we can talk about Huawei and telecom and all that and what that means. But, clearly we're going to have a fair amount of foreign control issues with government contractors as we move forward. But why don't we kind of throw it out and let Manan kind of, I as we said in the prep call, my government M&A practice was a little bit quiet last year. But Manan, and so I thought maybe the whole market was off, but Manan tells me I'm not networking anymore. So I'll let Manan kind of talk about the state of the M&A market and what he's seeing out there.
Yeah, thanks, Andy. So I think we had quite the opposite experience last year. It turned out to be our record year. We closed 27 transactions, which was the highest in any given year for the firm. And we think, so we did suspect a big slowdown when we hit the COVID situation in March, and things did come to a halt for a while, for about 30 to 60 days. But I think by late May, things started to pick back up. And then from that point onwards, all the way to the end of the year, we just had a tremendous volume of transactions. Deals that went on the sideline came back. people decided to go ahead and complete those transactions. The government contracting was obviously it's immune to a lot of other external factors, as we all know. I mean, that industry is probably one of the most stable industry, and that's one of the reasons why investors like it. And we are seeing more and more private equity groups coming into this market every day because of the underlying characteristics. It does come with some other challenges, though, as a set aside regulations and small business 8A, STVOSB and variety hub zone and variety of those kind of set asides, and how to sort of navigate through that. And it's not easy, right, from a transaction perspective, but we do have done a lot of work in that arena over the years. So I think once one understands sort of how to map that out and understand the limitations around, depending upon which status a company might be playing in. I think there are ways for any given situation. Also, the government is sort of moving in a direction where I think the new vehicles, as we all know, there are 17 best-in-class vehicles out there through which the government procures large amount of work, right? Services and products, etc. And if you don't have access to one of those vehicles, then I think you will have a big disadvantage in terms of working with the government. And the way in the past, the way these awards have been made, there have been different tracks for the small business, for the minority owned, for the full and open and unrestricted track. And it becomes hard for the companies once they become successful using one or two of those vehicles, if they're successful in getting a slot on one of those vehicles and then find a lot of growth, then to transition them into full and open has been a big challenge in the past. But I think the pattern now we are seeing, and hopefully it'll be continued, like with the CIOSP4 vehicle that's right now RFP is, I think it has come out or it's in the process of coming out.
Yeah, we're waiting on the final RFP to drop any day now. I've been watching that every day.
Yeah, but I think in that one, the government is now allowing the small, if you get a slot as a small business, you can automatically graduate into full and open or large business. And I think it's going to be very advantageous. This is a vehicle that, with $40 billion worth of awards under that over the next 15 years that the government is planning to make. So a lot of companies are gearing up to put a bid for that. And, the government is also moving towards scorecarding mechanism. So it's becoming more and more of a quantitative evaluation as opposed to a subjective evaluation of capabilities and what have you. So I think things are getting much more streamlined. And we see that, it's going to continue to drive the M&A activity because, the people that don't get qualified on some of these vehicles or these contracts, they end up then acquiring businesses that have those awards in order to gain access. And that's been generally the trend in the past that drives a significant amount of volume in terms of the M&A activity within this space.
Yeah, Manan, that's a really good point. All these new scorecard approaches, it's really a check the box. And in order to get qualified to be on these large GWACs, you got to have all those proper quals. And if you don't cover a certain area, you don't have a certain type of contract or size contract, yeah, you're going to go out and buy it. I've had several of my clients reach out and be like, hey, do you know someone who works in quantum computing that's done a job with DoD? It's like it's that pinpointed, and the only way they can get those points is by an M&A activity. So it's really interesting. So I agree with you, Manan. Getting on these large GWACs really is the key. And right now they're even pushing it so much now that pricing is no longer a factor. It's all about those quals and past performances. And do you have the accounting system to be able to do it? How much does it cost? Well, we'll figure it out at the task order level. So that's an interesting new development in the industry that they're pushing towards. Who can actually do this work? And once we determine who's able to do this work, we'll then figure out what the pricing is. So getting that ticket to ride really is key. So especially in the small business space, like Manan said, COSP4, which should drop any day now, but you also have this Polaris RFP coming out that's directed for small businesses. And I heard on the call, a bunch of you are interested in these small businesses. I think if you're in the IT space or anything tangential to the IT space, they really should be, companies really should be looking to get on this GSA schedule for that. To get back to Andy's point about cyber, this is not going away. CMMC, now, essentially becoming law of the land for DoD contractors. You see that requirement being incorporated into non-DoD solicitations. The Polaris RFP, as of now, asks the companies to talk in detail about what your approach is on IT infrastructure and how you're going to keep it protected. And while not saying you need to be CMMC qualified, let me tell you, when the task orders start coming out, especially if DoD is ordering from you, you're going to need to be CMMC qualified. So for both from the angle, like Andy said, yes, it's a big cost factor, but again, if you don't have it, you're not going to get in. So it's one of those go, no go type things. And if you don't have that capability, companies need to be figuring it out. And then that being said, if you're a cyber company, Omar, you mentioned you're working a bunch of cyber companies. Geez, I think the last GAO report that came out with cyber infrastructure vulnerabilities within the government, literally they had thousands of recommendations still outstanding. So that spend is not going away no matter who's in charge in the administration. I think the Biden administration will continue spending on cyber infrastructure, especially given the SolarWinds incident that just happened not too long ago. So there's going to be a lot of investment in encryption and those sorts of cyber protective technologies. So it's an exciting time. I think set-asides, yeah, I agree. Manan and Andy, I think you mentioned it too. I think that's only going to grow. I think the initiatives that they had for small business that are going on, the last administration came out with the extension of the eligibility for small business from 3 years to 5 years. Right now, we're in a transition period where companies can choose either 3-year or 5-year look backs. And then I think in 22, companies will be able to use a 5-year look back to see whether or not they qualify for small business. So lots of interesting things going on, to say the least. I'm trying to remember if there's anything else that we wanted to talk about that you guys brought up, but yeah, lots of change. That's the definition of the GovCon world, right? And you got to be ready to pounce when the changes are made. Jen, you seen anything else you want to bring up?
A couple of things before I make a step back on kind of trends to address CMMC, right? And acquiring the small businesses and businesses graduating up. Michael talked about the roll-up. So roll-up is sexy again. A lot of I have been serving a lot of private equity doing roll-ups. There's just a lot of diversified or very small businesses that's pretty ideal. You buy them low and then you turn around and according to one of my clients said, there's you pretty much make money on the day you bought them, because you just have to know which ones to buy and you can turn around and sell them for a higher price. But in terms of CMMC, and we're dealing with that with a private equity client of ours, a first time buyer of a government contractor. So what I have seen is there are levels. I mean, right, Jeff? So, it's not as if you have to be operating at a Ferrari level in terms of CMMC. So depending upon the contracts that you're targeting with the government, there are some levels that you need to comply with. So the compliance of that is pretty incremental. So, in a diligence process, like what we do, we have the financial folks like me who have kind of an understanding of both, and then obviously the mastery of that is with our government contractor due diligence. So, in a private setting, a typical commercial business acquisition, you would normally have your IT and your financial due diligence and tax doing that, and all the others, right? So in a government contracting situation, if you're interested in one, you have an additional component, which is your government contracting due diligence. That would kind of help you usher through the process to make sure that the company that you're buying is ready or not ready. So if they're a small business, I'm sure you're buying them for growth, which is what I have seen, that they need to be poised and prepared to win the future contracts. So, it's kind of you win some, you lose some, right? So most of those contracts that you've already, contracted for, signed, you normally can take them all the way through and complete them, right? You're not gonna, not because a bigger acquirer gets you and then all of a sudden you're no longer qualified. But as I've said, the inspiration is you want to buy them this small and probably cheaper so that you can graduate and bid for bigger contracts, more money to make the business grow. So that's kind of I wanted to mention in that particular situation. In terms of overall trends, I mean it's cybersecurity all the way through and technology. So we've seen that last year, even late last year, despite COVID and everything, I think there were big acquisitions that occurred, and private equity is in this space. So you have the strategic. I don't know, everyone heard about Northrop Grumman, right? So selling their federal IT to Peraton, owned by Veritas. So that's an example. And then I think they are merging that with Peraton with another company that they sold. So, and the objective of that is in order to provide an end-to-end business solution to the government. So that already is telling us that they know that the government is going to spend a lot. There's a study of one firm, I don't know, they said about 2.8% growth in DoD budget. I'm not sure, Jeff, if you've encountered that. So everyone knows that there's a ton of money there. So technology, cybersecurity is going to continue. I've seen that happen in both big and small. So the smaller ones are more specialized. The other thing I have heard and seen is that the government now is, especially DoD, probably in the innovation unit, is that they're focused on true value. If there is a best solution out there, ingenious, something that could solve a government's problem, they're definitely open to seeing that. So, anything innovative, big or small, that they think could be big. I also heard that or have seen that some of them would like to, so there are kind of proprietary purchases on software-enabled businesses, because when even if it's a government, once they're tied to a software, it creates customer stickiness, right? Because it's tough to move from one setup to another setup. So I could just see that the fiscal 2021 would even be probably a bigger, more robust M&A market for transactions for government contracting.
This is Rob. I had a thought or two. One is if one or two of the panelists can address keeping it a little bit more simple, less of the government three-letter words for someone like a pal of mine like Brian, which isn't a specialist in government contracting. How would you sort of pitch to an investor, whether there's an opportunity to get involved in either a private transaction, or are you all sort of bullish on investing into the defense conglomerates like Northrop, SAIC, Boeing, et cetera? I'd be curious as to, your thoughts on that.
But I think, the private transactions generally, if you do it right, they fetch a much better yield in our experience than the public securities. Of course, you'll have a lot of stability, and large institutions like Northrop or Lockheed or Leidos and CSCI and many others, right, that offer a great investment opportunity in general. But they move at a steady pace. Once you are $1 billion or $2 billion plus, to achieve a 10-20% growth year over year, it's not easy, right? I mean, you have to add another couple of $100 million worth of revenue each year organically, and sometimes you get there, sometimes you don't. But on a smaller company side, if you're a 20, 30, $50 million company, it's much easier to achieve that level of growth. And therefore, if as that company continues to grow, and eventually you sell that business, you will have a much better chance of generating higher yield or a return. And that's why the private equity groups are very interested. There are lots of investments in this space. It wasn't a favorite sector for many years, but I think in the last 10 years or so that has changed, and a lot of private equity groups have taken positions in this sector, and they continue to go after this. I mean, one of the other things that I would mention is that there are SBIC funds, the small business investment companies, where the SBA gives them capital to invest alongside with the capital that they would have raised, And it's an advantageous type of situation because the SBIC funds are exempt from the aggregation rule that the SBA looks for when an investor buys a control position in a company, and if that business has a small business set aside status, typically, a non-SBIC fund, SBA would look at all the other holdings they have, and then they would aggregate the revenues or employees or whatever size standard they're measured against, and then they would do the test to see if they still remain qualified to do business as a small business. And generally, that prevents a lot of the non-SBIC investors to participate in this market, especially if you want to go after investing in small business type of companies. But the SBICs are exempt. So if an SBIC investor takes a control position on a small business, they are still measured against that independently on their own merit as opposed to other assets they might own. So it's a special advantage that they have, and we've done many transactions with SBIC funds that are using this strategy to their advantage.
I think one thing that COVID-19 kind of highlighted is, what are the resilient businesses versus the non-resilient businesses. So part of diligence now, if private equity or strategic is trying to look at a business and 5 years is enough for them, now the question is, what did you do during 2008? So that's now the question. So they're trying to go back to the periods where there was a recession or like a downturn, economic downturn, and would like to understand better how that business fared. So due to COVID-19, and there's a ton of businesses that are kind of resilient. Engineering businesses pretty much stayed active because essential, the money is already there, right? Capital expenditure or capital improvements already been allotted and funded, so life went on. And then one of the businesses that were determined as resilient is government contracting. When everything was a halt, they continued business and providing services. We need IT, cybersecurity, that's just needed all the time. So but that's kind of probably one of the things that contributed to the emergence of, just Manan said, now government contracting is becoming popular again, even in transactions.
And I think the underlying fundamental characteristics of the government contracting businesses are pretty appealing to both the debt players and also the equity players. I think for equity players, because they can easily get some leverage on any government contract portfolio. Most of these contracts are 5 years long. So once you get an award, you have a backlog of roughly 5 years. And that's pretty healthy from an investment perspective, right? There's unless something really goes wrong, typically you're going to realize the projected cash flow that would be generated through that, contract over the life of that contract. So that becomes, very appealing. I think the investors can find, good amount of leverage to put a transaction together and, come in with a remaining equity capital. And I think that, so it's also easier, to participate in the transaction activity from a funding perspective.
Yeah, just the other quick appeal is that no one thinking about this, not just at the federal government contracting, but we have 50 states and some territories here, and I think there's lessons learned here that if you get into state government contracting, even local government contracting, there's business opportunity, there's business margin, and if you look at things from investment portfolio diversification, it's an interesting stream, and each state has its own structured, government contracting opportunities. So that is interesting. And then, Andy, reminder to go back to Robert's Racidi's question on sort of the international, because that brings up just both tremendous opportunity and margin, but just with CFIUS and other things. Sorry for using a government sort of acronym, but I think that's an opportunity, but it's one with certain interesting complexity to it.
Yeah, no, CFIUS, for those who don't know what it is the Committee on Foreign Investment in the U.S., and it basically makes decisions on whether or not a foreign investor can acquire the U.S. assets or not. Depending on the transaction, it's a relatively easy process, but in the government space in particular, it can be a rather cumbersome process in making a decision as to whether you seek approval or seek forgiveness is always an interesting question. Clearly in the Trump administration, they kind of stepped up the activity in the CFIUS space, particularly in regards to the Chinese. Huawei was clearly in the news, and we were talking about that the other day as we were preparing, and that the ban on using Chinese telecom equipment in networks becomes difficult because, as Jeff, I think you were saying, that there are regions in this country where it's impossible to transmit data over a network without using Chinese manufactured telecom equipment. And so how that would affect even something as routine as communicating between two military bases could be create an interesting problem. So I mean, as to Rob's point, who I guess is away for a fire in his building, perhaps because they didn't want that question asked and answered, and so they're torching Rob. The short answer is it's depending on where they buy. I mean, I think anybody buying into a defense contractor will have a significant problem. A company that may be buying into a civilian agency contractor may have it a little bit easier, but there will be, there are limitations on how much they can own, their board access, their access to the company that they buy, that can be structured around to some degree. But I think in a highly sensitive area, you probably won't get approval for it.
Yeah, and as you may imagine, the Intel community also has even additional requirements. So,
right. Yeah, I don't even think I would try to have a foreign buyer in an Intel company, to be honest with you.
Does not work well. I mean, you could think about maybe a Five Eyes type, basically a basis. Sorry, I'm talking government terms. I spent 8.5 years in Intel community. So we're talking UK, Canada, New Zealand, Australia, and then US is the fifth. So if your company is based in one of there, hence, BAE is a huge player in the space, but they're British owned, but do just fine the Intel community, put it that way.
Mm-hmm. It's tricky. I mean, obviously, you got the F-35 program that's got every one of our allies engaged in it to some degree. So there are clearly exceptions, but that those exceptions are carefully structured and made to work. And so it's a very different situation. But I mean, buying in that space for a foreign company would be very, very difficult. And you even on the private equity side, when we're selling and to a private equity buyer, we kind of look through to the investors in the private equity fund. So even a U.S. fund that may have a significant concentration of foreign money can be a little bit of an issue because of the attestations the U.S. company has to make when they go bid. Don't want to inadvertently disqualify your company from the assets that the revenue source that you're buying.
Andy, could you elaborate as to what a percentage would indicate significant ownership of foreign capital?
In a company? Well, I would obviously control, but then once you walk down from control, you could have a 20% control, but then maybe in a typical venture deal or a private equity structure where you don't have a control investment, but you have control-like features at the board, you could find yourself in a situation where you have disproportionate controllability, and depending on in a CFIUS environment or a bid protest environment, right? You have a U.S. owned company, 100% U.S. owned company. We'll make it easy. Retired general set up the company, bidding on against another retired general who's 25% owned by maybe not one of the Five Eyes countries. We'll pick Germany. German investors will forget China and Russia and all those. So nominally an ally, and the German-backed company wins, you could certainly find the U.S. 100% U.S.-owned company protesting on either CFIUS or contract grounds. And well, I guess they couldn't go back and complain about CFIUS, but they could go back, although they probably could, but they could certainly protest the award and, tie it up. So there's a lot that can happen. I mean, my litigation partners make a good living defending some of those things. So we're grateful when they do it, but it's a tough thing. I mean, it's not like it's a private company selling commercially where it's easier. There are a lot of rules, and losing bidders can protest the winning bidders and tie things up. And high percentage of foreign ownership would could tie up a award for a long period of time. And knowing that the contracting officer may not award it to that company just to avoid or just to allow the contract to be given and the work to be done.
A lot of that work can be done in the pre-award phase, looking at certain terms of the contract to see foreign control interests in companies, and having that outlined in the actual RFP would be really key. So if one of your competitors is potentially significantly foreign owned, then you want to start petitioning the contracting officer. Hey, are you sure you want someone who has ties to certain foreign countries? Maybe you should add that as a requirement. But anyways, I'm getting into the weeds here.
On the protest front, I know we're addressing the international ownership driving the protest activity, but do you find that there's a degree of protest that kind of seeps into even a high percentage of domestic bidding results? Because my clients tend to, they factor in a high percentage of protests for their awards when it comes to projecting their pipelines going forward.
I think protests have become pretty much commonplace these days. I mean, everybody, especially contracts of decent size and significance, they're all getting protested once they're awarded. A lot of times the protests are not successful, but what it does, to the company, let's say if they were an incumbent on a specific contract and they lost it to another competitor during the recompete, but when they protested and the government takes 60, 90 days or sometimes 120 days, whatever time lag there is, they're allowed to extend or continue to do the work and bill, right? So they just generate enough cash flow out of that 3-4 months of time that itself pays for the protesting cost and legal activity and more, right? So from a commercial perspective, and I think that needs to be streamlined somewhat, but if you look at the recent award on the Oasis vehicle, the government was smart. I mean, they did the awards in a piecemeal, so they didn't award everybody at the same time. They had a batch of awards, and so everybody kept guessing that they might be the next batch or the next batch or the next batch. And I think that kept the whole protest activity to a much lower level than you might see in other contracts. So I think the government is getting smarter, but it is, in today's environment, it is still very much commonplace.
Yeah, I mean, the latest report from GAO, the annual report, says over 40% of protests get some kind of action. Not necessarily overturning decisions, but at least some kind of remedial action. Having the agency have to relook at something or change something. So yeah, given those statistics, it's hard for folks, to say, oh, geez, there's a 40% chance I can make something different happen here. Yeah, I'm gonna make that investment and see what happens. So yeah, that is one of the big downsides to the industry, but you make it work. It's part of the game, right?
Well, and sometimes even on the IDIQ contracts where you're going to have multiple awards coming out under the contract, you might not file a formal protest. You might file an inquiry or a request for reconsideration or some other thing. And the simple reason is because there's another award coming. You just want the contracting officer to give you the next one. And you're not going to really you have to balance ticking off your contracting officer too far by protesting versus just, hey, why did we lose? And, give us the next one and we'll be, we're not going to bother you. And there is an element of that evaluation that goes into, deciding whether to protest an award or not, or how far you go in protesting.
I had a follow-up question, but Marianne, I see a family office industry legendary friend join from Chicago. I thought she would introduce herself, and then I think you have another guest as well. But Linda, you want to?
I was just about to actually see if I could chime in and have Joyce and Linda make an introduction. I see also Rob came back from the fire, so I want to make sure that he's okay. So it could be great to get those introductions. So thank you, Rob.
Great. Hi, everyone. I'm Linda Mack. I am based out of Chicago. I have a firm named Mack International. We specialize in doing C-suite executive search for family offices, family investment firms, family business enterprises around the world. Work with first generation through seventh generation and everything in between, and work around the US and overseas. So had the pleasure of knowing Rob for many years, and thank you for inviting me to join you this morning.
Nice to meet you, Linda. I love your backdrop.
Oh, thank you. It is Chicago, but it's virtual. We have much more snow on the ground right now.
That's right. Yeah, how about Joyce? Very nice to meet you.
Hi, good morning, everyone. Apologies about being late. I'm with you up in the Berkshires and we are snowed in. So it's beautiful, but limiting in mobility. I have a investment banking boutique called CapW Global, where we focus on women-led businesses and do capital raises, institutional capital raises, as well as a lot of M&A for mid-stage companies, women and men-led. Pleased to be joining you today. We also do some work in the government contracting area, so I'm very interested in what the speakers are saying. Thank you, Marianne.
Oh, thank you. Good to see you.
And we also had John Mastel join. He's a multifamily office friend who had been part of Kevin Plank's family office, the founder of Under Armour, but he had to bug off a little bit ago. My question, industry-wise, and Mike Monteleone, if you're there, if you would sort of, it seems like you guys are being a little conservative on both COVID spending in terms of either economic stimulus or just healthcare spending. And Mike, I respect your input on the defense side. Are you seeing a delta to your defense holdings as well with respect to the new administration? Do you think it's be bullish to some of the mutual manufacturing and precision equipment spend?
Yeah, Rob, that's a good question. I think it's probably a little early to figure out where Biden is going to go with everything. I would say, clearly through COVID, some of the new contracting work slowed down, and whatever, government people work 4 days a week, and maybe they were working 3 days a week now. But so we've seen a little bit of slowdown on some of the awards that we were anticipating. But I think I forget who brought it up, but I think Trump put Biden in a position in terms of just kind of geopolitics that I don't think he can change a lot of things drastically in terms of, how you look at China, how you look at Russia. Obviously, they want to make some changes with Iran, but I think what's happened in the Middle East will make it very difficult for the Biden administration to kind of really move things a lot. I mean, there's a lot of executive orders coming out, and I think it's good for his base in terms of just, feeding them some stuff. But in terms of big dollars, we don't see a big move or change because it's just that things don't happen quickly. We're just wondering in terms of, some of the stuff they're trying to do. I mean, this whole stimulus plan, if they actually make the minimum $15 an hour for all government contracts, that would be a nightmare, quite frankly. And I'm just not sure where all that plays out. I think it's, given he doesn't have as much of a majority in either house as Obama did, I think there's going to be more compromises. But it's not a great answer, Rob, but I think it's status quo maybe continues to be positive.
Jeff, anything on that COVID question?
Yeah, so here's the challenge. What I've been telling folks is, like, all these stimulus bills come with a long-term cost, right? So where are the long-term cuts going to come in the future? I mean, you can't keep spending and keep driving up the debt till wazoo. I mean, there's going to be a cap at some point where someone's going to have to stand up and say, listen, our interest on our debt is getting to be such a burden, we need to figure something out. And, you know, whether it comes from Social Security down to whatever other discretionary spend there is, and defense is, you know, traditionally one of those areas where it could be subject to cut. But I agree with Mike. I don't know if I see that immediately given the current geopolitical things going on. So it's a tough call. I haven't seen any immediate move to cuts. I mean, until we see the FY22 budget come out in the next month or so, I mean, we'll obviously get a better idea. But ultimately, I don't long term. There's a chance, but I wouldn't bet on it either one way or the other. I don't see. You know, it's like cybersecurity is not going to go away, and DoD is going to spend a ton of money. But are they going to spend a ton of money buying more ships and planes? I can see that leveling off.
Well, I think that we're a couple minutes. There's no other comments. Andy, I don't know if you want to drive in a big closing comments, but I really want to acknowledge both Andy, Jen, Manan, and Jeff. This was extremely valuable, and I'm sure everybody can agree. And I appreciate everybody joining and taking this time this morning. And if you, I know Rob, Brian sent me a note that he wanted to be participating in future events. We do this every Wednesday morning, and if you have ideas or thoughts of topics that you find interesting to you, you know, you can send me an email and let me know if you have ideas. We partner with CohnReznick in a lot of these, and we have several other partners as well, but mostly CohnReznick. So thank you very much, Jeff and Jen, Manan, and Andy.
Thanks for having me.
Thanks, pleasure.
Is the Cohn-Resnick team here from DC or New York?
We're both from the Tysons area, DC area.
Yep,
Okay.
DC.
Awesome.
Yeah, look forward to participating more in the future. Thanks again, Marianne, and good meeting you, everyone.
Thank you very much for your time.
Thank you.
Nice
Bye-bye.
meeting everyone.
Linda, we should catch up more, and maybe we do something on executive HRM or something like that.
That'd be great.
You know, we'll liaise and all, but I'm glad you could make time. I know you're heavily sought and you know, you're a writer at a lot of things, but it's good to see you. Thanks for
Well, thank you so much for inviting me. Look forward to joining you again. And yeah, I would be happy to do something on executive search, what's going on in the markets, compensation, so on.